Hi everyone, welcome to another episode of Sumsub for Experts. Today we're going to have a very interesting guest from the, let's say, blogging and influence inside of the AML compliance, and this is Anna Stylianou.
Thank you, Tony. It's a pleasure to be with you.
Anna, you are you working for AML Cube. This is your business, as far as I understand.
Yeah.
Tell a few words about this. So this is your consultancy company.
Yes, it's a new consulting company, recently established. What I'm doing is actually I am providing consulting services, content creation, and anti-money laundering trainings.
Apart from working for AML Cube, you also are a compliance blogger.
Yes.
You publish very frequently on LinkedIn, right? You have 18,000 followers.
Yes, almost 19.
Almost 19,000
Yes.
followers,
As
which is a lot for LinkedIn, obviously. And you have like thousands of likes and views of your posts. And posts are about like different types of questions about compliance, KYC, AML, anything like that. How did you start this side of your career?
So I just decided to start sharing my knowledge on social media.
Yeah.
So what I try to do is to increase awareness about the principles on how anti-money laundering compliance need to be implemented and help people take appropriate decisions when they are deciding on their anti-money laundering program. So that's how I started. Apparently people were thirsty for this type of content. So my number of followers increased significantly during a very short period of time.
In terms of KYC, you are practicing this, you are posting about this. What are the main issues with KYC as an area, as an industry right now?
The major issue with KYC is that people are often trying to use a checkbox approach.
Right.
This is the greatest issue, meaning people are trying to tick the boxes on a checklist. I've done that, I've done that, I've done that.
Yeah.
So this is not a KYC,
Right.
This is checkbox exercise.
Right.
KYC should be an approach where you understand your client and you identify your client, you verify your client, you understand what to expect from the client, and you feel satisfied that you know who your client really is. This is the whole concept of KYC. And it's a measure to help businesses protect their company, not simply complying with the AML law. They believe that they can take another company's approach and implement it in their company. This is the greatest mistake because there are no two companies that are similar. No two companies have the exact types of clients.
Right.
No two companies have the exactly same products.
Right.
No two companies operate in the same jurisdictions.
Right.
So the approach used by one company, the risk assessment, the onboarding questionnaire should be unique and tailored to the needs of each and every specific company. So trying to take another company's approach and use it in your own company, there is a huge chance to do things the wrong way.
Although, on the other hand, we have this idea of reliance, and so the whole idea of reliance in KYC, in AML, is that you rely on third party and you take the approaches of the third party, but then you can obviously check that whether or not the risk matrix of the third party is the same as your risk matrix.
Yes, especially in Cyprus,
Yes.
banks do not rely on third parties.
And on other banks, for example? No, they don't?
In Cyprus, banks do not rely on third parties. They want to conduct their own due diligence.
It's the same as I heard that in some areas, for example, in crypto, some of the crypto businesses, they don't use simplified due diligence at all.
It's a choice.
Yeah, but they just don't do it because too risky.
I'm not sure if a crypto company can indeed have low-risk clients.
That's a good answer. Yeah, that's a good answer. we at Sumsub are automating some of the processes, and of course, the issue with address verification is a huge issue because the traditional approach is to process utility bills, bank statements, but then when you have a global business, the problem is that you have clients, let's say in Africa and in the US, or let's say in the UK. In the UK, it's quite easy to verify the address because you have data sources, but actually some of the data sources are not quite good, but still. And okay, in any case, you have utility bills and they're more or less standard. You can more or less easily process them. But let's say in Africa, in some places, you don't just have utility companies, right? And then you don't have utility bills. Okay, you have some banks, but also a question. So, and it's hard to kind of like harmonize these approaches among jurisdictions. So how do you think, are there any other ways how to do that? Maybe this recent case with Revolut, who for example, sent bank cards, and this way they verify the address. Maybe some new technologies. What do you think about this?
Yes, I believe that with the evolution of technologies, this problem at some point will be solved. Unfortunately, most anti-money laundering regulations still require a utility bill. But companies, what I'm seeing is that they started to combine this with geolocation tools, so where the customer is located now, and in a line, whether this is in line with the utility bill, the information provided on the utility bill. So that's a possibility. Currently, unfortunately, it is, and to my point of view, will remain a critical point of issue for at least the next few years until technology develops.
And I mean, obviously, even from the, let's say, simple logic or let's say common sense, it's quite easy to cook the utility bill, right? And we know that there are services like this on the internet, and it's quite easy to obtain some kind of utility bill that really doesn't have anything to do with you, right? And still, we don't have anything better.
Yeah, that's why some substance requires a photo and not a PDF of the utility bill. Yeah.
Well, we also have anti-Photoshop tools, so that's the main problem. So I mean, obviously, most of the people, they just do Photoshop the utility bills of somebody else.
It's more difficult to forge a photo than a PDF document. Yeah.
Yeah, of course. In terms of geography, I also wanted to talk maybe a bit. FATF, like let's say high-risk countries, and obviously one of the elements of risk matrix is to put what are the high-risk countries. Usually, as I see in crypto, the countries that are blocked really are like not very like large a number of countries in most cases, like the worst ones, like Big Six or something, such as, let's say, North Korea, Iran, now Russia, Belarus, and some of the countries that are typically put on the blocked status. But really, what do you practice in practice? How do you determine which countries to put on the gray list, on the let's say high risk list, which countries not? What is your approach here?
There are various things to take into consideration. It's the FATF list, the OFAC sanctions list, European sanctions in Europe also, and other sanctions UK, United Nations, depends what is the regulation in each jurisdiction. So we have the sanctioned countries, the blacklisted, let's say, and we also have the countries that are simply high risk, meaning that you can accept clients, but conduct enhanced due diligence. So, and this is the list that I'm using personally is the FATF call for action, the jurisdictions under increased monitoring for high risk countries. Also the European Union of high-risk country list, and some other sources which like Transparency International, Basel Corruption Index, to see if there are any countries with significant corruption or significant deficiencies in their anti-money laundering framework and that are not caught by the FATF or EU, but they pose risk to my company.
In terms of FATF grey list, we see that some countries are in, some countries are out. Is Dubai, as far as I understand. It's not out. Malta is out. I don't see personally that the fact that Dubai is on grey list actually somehow affects Dubai's business positions. They're quite good. They are vibrant, and like how this is happening. Like Turkey is on the gray list, and still everyone is doing business with Turkey.
Honestly, we are making assumptions here, especially about Dubai. They say that a lot of Russians are moving funds through Dubai. Not sure if this is indeed a true information, but if this is the case, then probably that's why they are a high-risk country.
But
it's an assumption.
I'm more like asking from the perspective of the consequences. So, okay, Dubai is on the gray list, but would you, for example, like if your client comes to you, would you like say, okay, Dubai is high risk, so you need to do enhanced diligence in respect of each of the customers who is coming from Dubai, and the client will tell you, are you insane? Like, we are doing so much business with Dubai. We should check source of funds, source of wealth from each user. This is kind of like too much.
It is too much, but this is what entities are required to do, actually. Now, it depends. You take into consideration some other factors. For example, is it €100 transaction or is it a €100,000 transaction?
That's true. In case of Dubai customers, I guess the second one would probably be case.
Probably. So in this case, you conduct enhanced due diligence and yes, to be compliant with the national law.
But we still see that the consequences for Dubai, I know that, for example, Pakistan, which is now out of the gray list, was really suffering and being in gray list, and they were like to a certain extent kind of like shamed by the fact that they are on the list, and they tried to get out, but we don't see these consequences for Dubai still.
Yeah.
That's very interesting.
Yes, it is indeed.
It shows that really when you put some very small country on the list, then it will be bad for this country. But when it's something serious, then they will do business as usual. You made a post on LinkedIn just today, I guess, about PEPs. And we know that there is a problem with PEPs. It's really easy to get in and really hard to get out.
Yes, exactly. PEPs pose the highest money laundering risk from all your clientele. Yeah. Why? Because it's very easy for a politician, a PEP, to do something wrong, to be involved in corruption, in bribery. We have the recent case of Eva Kaili with the European Parliament. She's accused for accepting cash from Qatar. She's not convicted yet, but they're making an investigation. So we can understand that PEPs pose a significant money laundering risks to a company. So when you onboard PEPs, you need to be extremely cautious. And of course, always conduct enhanced due diligence.
Well, for example, let's say a person is a judge from Australia, right? Technically, kind of like a PEP can be, right? But I'm stressing here Australia, not the level of judge or anything like that. Maybe it's like a small insignificant judge, but we are talking about a governmental official from Australia. It's still different, right, than let's say some kind of a politician from Tajikistan. The issue is what entities need to consider is the influence that the PEP has on governmental decisions. Right.
So, and how corrupted is the country also. So these are the things that need to be considered when assessing your PEP's risk. And there are PEP positions that they don't pose significant risk, meaning that they don't have positions that indeed influence governmental decisions.
For example, in some countries, it can be, let's say, state-owned corporation, and if you are a high-level manager in the state-owned corporation, you are considered a PEP, for example. But on the other hand, we have technological solutions such as, for example, WorldCheck and Comply Advantage, others, Dow Jones, and they provide you the information whether or not the person is a PEP.
Yeah, they verify actually what you use these tools to verify what the customer says. If the customer says, I'm not a PEP, you need to verify that he's not in the PEP list. If the customer says that he's a PEP, you still need to verify that. So
right, but given that the positions in the countries, they change all the time, and you need to basically manually recheck the results from the technological solutions. Or you would say that it's okay when you have a good technological solution such as WorldCheck.
Some issues that the technological solutions have is that they don't take into consideration each country's definition of PEPs.
Right, that's what I'm talking about.
Yeah, so this is an issue because, for example, in Europe, there's no differentiation between foreign and domestic PEPs. In some countries, the regulations require once a PEP, always a PEP. In some other countries, the regulation allows a regulated entity to reassess the client in the case he ceases to be a PEP after a period of time to reassess the client and then and then decide whether or not it will continue to treat that client as a PEP. So these tools like WorldCheck and other tools, do they consider this difference in regulations?
I don't think so.
So this is an issue that we have in regulated entities. Maybe, for example, I get an alert that this person is a PEP, but it was an insignificant position with no influence 20 years ago.
Yeah.
In Europe, if I believe and take the responsibility as a compliance officer that this person does not pose significant risk on my entity, I'm allowed to treat him as a medium client if I believe that. Whitelisted, let's say, if I decide, and I will monitor accordingly. In some other countries, you're not allowed to do that. You need to continue to treat that person as a PEP forever.
About Cyprus, I watched a video just quite recently, very recently, about the let's say allegations that Cyprus is a money laundering enabler. It's not only that video, of course. We have articles on the internet from the very well-known sources saying that Cyprus is one of the examples of enablers of money laundering. So this means that dirty money are flowing into Cyprus, and Cyprus doesn't have enough precautions to check whether or not the money is dirty or not. And obviously this involves the problem with Russian money, as well as money from other, let's say, former Soviet Union. How do you think? Is it still so, or Cyprus has, at least now, already a different story and has all the controls?
I don't believe that currently, with the current AML framework and the improvements that were made to the anti-money laundering system in Cyprus, I don't believe Cyprus is in a worse situation than other European countries. Why am I saying that? Let's start from how do money launderers abuse a banking system, because everything goes through banks, dirty money goes through banks. First of all, through complex structures. Our banks in Cyprus, there is no way to open an account to an entity if they don't identify and are satisfied that they know who the beneficial owner is.
Cyprus is a country in which AML compliance can be quite sophisticated, and some of our colleagues can accidentally get lost in what exactly is required and what is not. To simplify this problem, we at Sumsub have made a guide on AML compliance in Cyprus, containing all the necessary information for businesses working in this country. In this guide, our legal team will take you through all the verification process, starting with the onboarding of a person or a legal entity and ending up with record keeping and reporting. Reading this guide will save your time and make sure that you are on the safe side in terms of AML compliance in Cyprus. If you are interested in this guide, you can click on the link below. If you have more profound questions, just contact us and our legal team. Take care.
So, and this, a second point, this is always performed before the establishment of the business relationship. If they don't have full KYC, full customer due diligence, they will not onboard a client. They are very strict on that. And the third one is shell companies. Let's say that a shell company is registered in Cyprus. Central Bank has issued a circular which prohibits Cypriot banks from opening accounts to shell companies. And yes, this is implemented. So if you're a shell company and you want to bring money to Cyprus, you cannot even open an account. In Cyprus, we have a very clear definition what is a shell company. And this definition allows banks to open accounts to legitimate businesses without a physical presence, but are doing legitimate activities, but prohibit the account opening to shell companies that are used for money laundering purposes. So this definition helps the bank differentiate between the two. And recently, customers complained that the KYC required by Cypriot banks are extreme in some cases. So I don't think that now, with the current situation in Cyprus, the anti-money laundering framework, the banking measures, it's not like it was before, at least. I'm not going to say that money laundering is not happening in Cyprus, because criminals always find ways to
circumvent.
To circumvent and always stay one step ahead of regulations. So they are doing their homework, they know how to hide, but we have a very good and strong anti-money laundering framework as of today, currently.
Right, and one of the weapons in this war against illegal money is, of course, the transparency registers that are now part of the policy of the European Union. But as far as I know, the transparency registers in Cyprus will not be published.
They will not be publicly available. Yes, if you can demonstrate that you have a legitimate interest, like for example, I am a regulated entity and I want to have access to the system to conduct my customer due diligence, I will be allowed to have access to the beneficial ownership register. Journalists, as far as I read, will also have access. The competent authorities, the police, and anyone else who has a legitimate interest.
Also, important thing about Cyprus is that Cyprus, like a year ago, started inviting crypto businesses to the island, providing them quite broad, as far as I heard. We had an interview with Yanis Osiotis, and he told a lot about this. He is one of the, let's say, apostles of this approach, and we saw that some of the firms actually registered on the island. One of them was FTX and OKEX and Revolut for the crypto purposes. Do you see a lot of development in this area and a lot of booming, let's say, crypto businesses in Cyprus?
Well, currently we are living internationally a crypto winter, as they call it. So we don't see a lot of companies the last few months to pop up for crypto services. We see a reduction on that. Overall, Cyprus is a welcoming place for businesses. The CISEC has a regulation on how to register a crypto business. It has the criteria, what you need to do, and they really understand what is required to obtain a crypto license and CISEC understands the crypto business. And since they are the regulator, they are doing what they need to do to ensure that these crypto entities will be able to register and operate in Cyprus.
But they cannot open bank accounts. in Cyprus.
That's true, yes. As we have already discussed, the banking system is overprotective, and they don't have a high risk appetite for money laundering purposes. So currently, yes, you cannot open a bank account if you're dealing with crypto. I believe that with the adoption of MiCA, we will see banks starting onboarding crypto businesses.
Which means, which year?
2024.
And another question related to Cyprus is a question related to my sphere of interest, which is remote identity verification. We know that in Cyprus, we don't have, let's say, a modern regulation of remote onboarding. So it's still quite old, and it requires collection of original documents, whatever it means, because obviously when it comes to remote identification, it's really hard to imagine that a pigeon will open the window of the bank and provide some kind of a passport in original and then return back to the owner. So obviously this will not work this way, but we see that the businesses are working quite well. Trading business are flourishing for already, I don't know, 20 years in Cyprus, and obviously they work remotely. How can you explain this? Why on one side we have very strict and very, let's say, yes, put it this way, strict law on remote onboarding, and at the same time we see that there is no remote onboarding, and at the same time we see a lot of businesses working mostly remotely.
CISEC, indeed, the directive that they have needs to be updated. It's indeed a business practice to onboard remote clients. Mostly, I would say in the crypto industry, Forex industry. Banks, I believe they are doing the traditional too. As far as I know, they're still requiring original documents. But other types of companies, electronic money institutions, they are under the central bank. But still, the directives are based on the fourth AML directive. Now we have adopted the fifth. We have the EBA, the European Banking Authority's guidelines on remote onboarding, on how entities will be able to, how the factors that an entity needs to consider when choosing a remote solution. And all this European regulation, we also have the EIDAS about electronic identification.
Oh yeah, EIDAS, this is big thing.
So all these regulations are actually allowing, let's say, entities to operate remotely, accept clients remotely, but these entities need to ensure that these measures that they take are equivalent to the traditional face-to-face client relationships.
Yeah.
So CISEC is not, is a very progressive authority. Yeah. And yes, the directive is not updated, but I believe it's a matter of time to be updated, to be in compliance and to be in line with the technological development. CISEC is progressing.
We mentioned FTX. So obviously this is an elephant in the room. I just came from IFX conference in Dubai, and everybody is speaking only about FTX. It doesn't matter what is the name of the panel discussion, what it should be about. Everyone is talking only about FTX. So just like in the Coen movies, how do you think, burn after reading? What have we learned out of this?
We have learned that the crypto industry is not effectively regulated. Let's say, for example, a traditional investment firm in Cyprus is required to have governance arrangements, meaning having a board of directors, have 2 executives and non-executives members. They need to have risk management function. They need to have many things. We don't see this type of requirements for crypto entities, and especially FTX. That was one of the issues. They didn't have a board of directors.
Yeah. That's
only, one person taking decisions on behalf of the company. if you read the reports, there were no risk management, and they admitted it themselves that there was no risk management. Using the client funds to do investments. I mean, for an investment firm in Cyprus, or I believe in other countries also, this is prohibited. I mean,
does Cyprus? That's actually an interesting question, because obviously Bahamas didn't care about how FTX really worked, right? At least we see it from the facts, what we have in reality. But does CySec really check? Let's say, for example, it's quite easy. Like you set up a company in Cyprus. Okay, you put some, like your gardener as one executive, and then your plumber as another executive, and then your dog as a member of the board, right? Or anything like that. Just like non-existent people, or people that are not involved in any type of a business really. Like, is it something that is verified in Cyprus?
Actually, yes. When you make an application to CySec for a new company or to appoint someone as a board of directors, you need to prove that he's fit and proper. And you need to answer a questionnaire, to provide all the information, background information, the certifications and everything. So it's not that anyone can be a director in an investment firm. So regulations are strict.
So obviously one of the problems with FTX, except for that FTX was mismanaged completely, was also the fact that they didn't have enough funds, because they obviously just wasted them in some investment operations, right? And so I know that some other market players came up with the idea of proof of reserves as, let's say, a quality stamp that everything is fine with the company. It has enough reserves. How do you think? Does it mean that we will see, let's say, another type of services, kind of like consultancy services, or auditing services, which will be proof of reserves?
What happens with investment firms, for example, you need to have an internal auditor to test your system, but you also need to have an external auditor to verify these reserves, to verify your financial statements, and they also need to check your clients' funds to verify that indeed these funds exist in a segregated account in a European bank. This is something that crypto entities will need to comply with also.
Right. Yeah. So you can just basically, this means that you can just basically reproduce the internal controls that exist in trading businesses and just apply them.
Some of them can be applicable to crypto entities also. But it's a different business, it's different model. So MiCA, we expect that MiCA will implement some rules that are specifically tailored to the different nature of crypto entities.
That's it. I don't have any questions for sure. This was Anna Stylianou. Please follow her on LinkedIn and join the army of the followers that are already there. Also subscribe to the newsletter, because actually very, very interesting newsletters. I read from Anna. She's making good, let's say, set of news from the world of compliance and AML. This is also very important to be tuned in the area. So thank you for your attention, and I guess that's it. Wait until the next video.